Today, Chemical Services Group Omnia's full-year headline earnings per share increased 39% to R13.30. Profit for the year jumped 40% to a record high of R880 million. A total dividend of 420 cents was declared, and that reflecting a 50% increase. Company CEO Rod Humphreys joins us now to discuss the results further. Rod, thanks so much for joining us today. Well, at the end of your first half, the opening line of your commentary was the macro environment was exceptionally good for the mining division, positive for the agricultural division, and difficult for the chemicals division. We've seen a repeat of that very same sentence now at the end of the full year, and again confoundment coming through of how you're actually getting the mining sector to work for you given its operating environment, and more specifically how sustainable that scenario is moving forward.
Yes, it's been wonderful in the mining environment for us, and perhaps we are luckier than some in that we have less exposure to the underground mining sector. And certainly in the open cast and quarrying sector right across Africa, it's been positive news rather than negative news.
Rod, it's Lindsay in Cape Town. I used to speak to a chap on my radio show, and every single week when we used to speak, I would say, pick a stock, and this was about 2 years ago, and every single week he would say Omnia, and I said, look, you've got to stop this now, it's really boring, but apparently he's been absolutely right. These are sparkling numbers. The operating margin going up from 8.1% to 9.1% doesn't sound like a lot, but even with my rudimentary maths, that's a 12% move. That must be quite meaningful for you.
It certainly was, and yeah, I guess it reflects a lot of the mining, but it's counterweighed by some of the weak performance in our chemical sector. And in agriculture, we did have some weakness in that what we call our ammonia to urea ratio was a little bit adverse to us and certainly cost us some money in the agricultural sector.
Mm-hmm. You highlight the fact that your exposure to the low surface mining projects more than anything else cushions you in the mining sector. It's also your expansion on a geographic basis. So let's take a look at that, because African exposure holding you in good stead as well. I mean, to what how exactly do you control this expansion? Is it piggybacking off clients that are expanding, or are you going it alone?
Look, we've been in the African markets now for well over 20 years. And Africa is really a large place. And many people talk about Africa, but one must distinguish in that there are some 52 countries in Africa, and one has got to operate in different environmental, different legal systems across Africa. So yes, what you say is true. There are many of our clients that we can follow across the globe. But also, I think more importantly, there are also many new clients in that part of the world, and I think they are recognizing us for what we are in being a well-experienced operator in the African context, and to be able to supply a really good service to those mines in many, many remote areas of Africa.
And Alicia's already alluded to it, but anyway, it says that the macro environment for this year was exceptionally positive for the mining division, good for our agricultural division, and difficult for our chemicals division. Never mind the last two. What about the first one? Macro environment exceptionally positive. Now I look at the macro environment worldwide, and apart from China, which is growing at 7.8%, I see things tapering off a little bit. Do you get a sort of a cold chill when you see what's happening in China at the moment with the stock market coming off and the People's Bank of China playing hardball? Do you think for the future this is bad for you?
Look, I think really the play from China is that if there's a drop in some of the resource demand from them, that overall affects the demand for resources. But there's also positive news coming out of the States and many other areas of the continent. So over a longer period of time, there is a shortage of resources, and a lot has been spoken about that in the African context. So whether it be food or water or metals and minerals, with the growth in world population, you may have some short-term ups and downs, but in the longer term, there's still very much a shortage in resources.
Mm-hmm. We've got miners coming under pressure in a big way, though, and as a result, mining players globally cutting back on capex, for example. So a potential end to this ride is something that you've got to mitigate against. How exactly are you doing it?
Look, certainly the turnover is an area that we still think that there's still somewhere to go in the African continent. But a large part of the improvement in our performance has come from our new nitric acid complex, where really we have improved the operating margin. So you'll see that the operating margin has gone up considerably more than the turnover. And it's really come about from us trading less and getting a production margin that's coming through. And that's going to still take some time to work its way through the system, in that the new complex is really only running at about 60% of its capacity. So over the next few years, we can see that steadily ramping up, and we'll get operating leverage because largely the fixed costs are already covered. So, it's basically going to filter right down to the bottom line.
Rod, if I was a commodities trader, I would be looking at these results and saying to myself, is this company and its results a leading or a lagging indicator in the commodity cycle? In other words, if these results are good, does that mean in the future there's going to be more supply in the market, so therefore commodity prices will come down, or is it going to be vice versa? Maybe give us a clue in your experience.
Look, certainly commodities are probably under some pressure, and as you rightly say, in the long term, maybe there's some cutback in future growth. But many of the operations we're busy with are still taking some time to get into the mature phase. So once you start a mine, for example, it takes some time to reach maturity. And even at current prices, it may be impacting on some of our customers' bottom lines in that the prices have reduced. Most of them are still very much in a healthy state. And for them, they need the type of services that we can supply. And in fact, I will be ramping up those services as the mines develop, particularly the new mines that have been put in place over recent years. So we still see, from our perspective, some quite consistent and strong growth going forward over the next few years.
Let's put some focus on your Achilles heel at the moment, the chemicals division. What are plans for initiating some kind of turnaround on that front? How much of it is in your hands? Because this is a division that caters specifically to the manufacturing space.
That is quite correct. And we've been doing an enormous amount of work. We've implemented a new ERP system right throughout the group, and that takes time to implement, is in the nature of those things. Now that's well implemented now. We're starting to see the benefit of being able to run our business in a different way from what we've traditionally done. And some of those improvements will probably still be happening over the next period. But I see a definite improvement in our chemicals business. So we've worked hard. We've kept the costs flat for the last 4 years, which I think is an achievement in itself. And we recognize that the manufacturing environment is in a difficult space. And probably people don't recognize the link between manufacturing and mining in South Africa, where there's a definite link. And if mining is struggling in the underground sense here, it does impact on our manufacturers as well. So with a weaker rand, I think that will also assist manufacturing in South Africa. And we're certainly starting to see a turnaround in our business, and probably due to a lot of good work that we've been doing over the last few years. So I'm quite confident in next year. We're probably not going to hit our targets, but nevertheless, I think we're going to see a good improvement in our chemical business in this forthcoming year.
Of course, no business, Rod, should rely on the South African rand because it's so volatile. You say in your prospect statement the macro environment for the next year appears promising and will be strongly influenced by the direction of the rand. What do you want the rand to do? Stay stable, go weaker, go stronger, or does your Treasury Department manage it for you and therefore you don't care?
Look, it always helps if the rand remains in a stable range. It certainly doesn't help us when the rand is bouncing around. I think where the rand is now is a good space. I mean, I certainly don't want to see the rand overly weakening. But I think you can argue that in past years it was overly strong. And perhaps it's now in a more reasonable range. And certainly I think a lot more comfortable to manufacturing. And, I'd be delighted if it stays roughly in the range that it is now.